Whether you're tuning in on the drive home or catching us between dinner and dishes, we are so glad you're here. Before we dive into tonight's conversation, just a couple of housekeeping notes. All right, so our mics are muted for this session, so you can sit back and relax without any background noise. That said, we absolutely want to hear from you. So if you have a question, a comment, or even just a great emoji to share, drop it in the chat anytime. We'll be using the chat box to interact throughout the evening as well, and I'll be there responding and sharing some resources. But if your question does need a little bit more time and attention, we'll go ahead and save it for the Q&A at the end of the session to make sure you're getting the best possible answer. And no need to scribble notes. We'll send out all the resources we mentioned tonight, plus a recording of the session in the next few days. So you'll be able to rewatch, revisit, or pass it along to a friend or family member. Now I'm excited to introduce our presenter for the evening, Alfredo Martinez, our very own Financial Inclusion and Education Officer here at Premier America. Alfredo is an accredited financial counselor and a passionate advocate for helping folks feel more confident with their finances. Alfredo has a ton of insight to share with us tonight. Before we get rolling, I'll let him tell you a little bit more about himself. So everyone, please welcome Alfredo.
Hi, Frankie. Thank you so much. So happy to be here, and good evening, everybody. I know it's Tuesday night, yes, Tuesday evening, or if you're tuning in at a later time. But here, this conversation is resilience through money management. As Frankie said, I am the Financial Inclusion Education Officer, so I've been in the industry for a little bit about 7 years. My passion is economic empowerment. Anytime, anywhere, when it comes to leveraging products and services that help us building better, better and more healthy money habits. That's where I'm here to assist. And so today's conversation is just that. And so let's jump into it. Next slide, please. Awesome. And as we transition, I just wanted to say if there's any comments or questions, please throughout the presentation, feel free to throw them in the chats. Definitely want to encourage any and all engagement. Much rather have some back and forth with you all, and as we kind of have this conversation. But I'd like to start off this conversation with a moment of mindfulness. And so one thing that we know when it comes to talking about money is that it often can be taboo, maybe in our social circles, in our community, with our friends and family. You know, if you ask any of your friends or family, you know, what their credit score is, how much that they're in, or maybe a moment where that brings some shame. You know, so as an example, if somebody were to be taken it, fall into a scam, perhaps. And so there can be a lot of emotions around this idea and around the idea of money. So I just have some housekeeping items here. So if you do share, please share your truth and listen to learn. You know, and sometimes money can be uncomfortable. And so lean in with one another. Chances are that we're all in a similar boat, so to speak. Of course, if anybody does share anything in the chat, you know, those stories stay here, but that learning leaves, of course. And sometimes we don't have all the answers, and that's okay. We'll definitely work towards getting closer to the answer or your truth or how we can be better. And that just wraps up into engaging in a growth mindset that there's always room for personal and self-development, especially when it comes to money matters. So I like to just start off the conversation there to ensure that this is a safe space to talk or share about, you know, sometimes sensitive things when it comes to money. Next slide, please. All right, so I have a quick icebreaker for you all. So financial success. So let's hear it from you all in the chat here. What is the first thing that comes to your mind when you think of financial success? Feel free to throw it in the chat. We'll give it about a minute or so. I'm here, you know, taking a look to see. Somebody said freedom. Absolutely. Feel free to expand if there's a specific area there. But absolutely, I agree with that. You know, and I'll talk a little bit more about financial success and what that looks like and what that means. But again, just trying to encourage some conversation here. I see somebody said doing what you want to do versus what you have to. Ooh, that's a good one. Absolutely. Okay. Somebody else said no debt. emergency fund fully funded 100%. So that peace of mind that we get when our emergency fund is good, absolutely, you can rest your head on that pillow a little bit easier in the night. Absolutely. Let's see. Feel free to continue those conversations coming in, but I will note there is something here that is similar. So there's a similar idea, um, kind of through these comments, right? But financial success can and often is subjective. What it may mean to me may mean something completely different to you. So we're going to talk a little bit about that here in a second. Another comment came in: health. Absolutely, there is an intersection between financial wellness and your personal well-being. Absolutely, 100%. So please keep it coming. I love those comments. Let's go ahead and move on to the next slide, and we'll come back to this exact idea here in a second. Debt-free, 3 to 6 month reserve assets overlay, but it's absolutely not worrying about every penny in the bank when shopping, 100% traveling, spending in general, firm financial, 100%. Thank you so much for your engagement there. I already see that this is going to be a great conversation this evening. So to continue the conversation here, to achieve financial well-being, one must be financially disciplined. And when we think about resiliency, there's a lot of things that come to our minds, or maybe to the way that we feel. And so we're going to talk a little bit more about what it means to be financially disciplined. But I want to start with a common ground. And so, Frankie, if you don't mind, next slide, please, and kind of have a common understanding. Because as I mentioned earlier, financial success is often subjective. There may be similar themes to what you feel, to what your neighbor or a family friend or a partner. But I want to talk a little bit more about how we as individuals can understand this a little bit more and maybe have some actionable items we can take away from this. So just a quick little agenda here. We're going to understand and speak about financial wellness. We're going to learn a little bit more about how to assess your financial situation. What does it mean to create a financial plan? Because financial plans don't have to be for your investment portfolio. It can be for yourself, for your day-to-day, month-to-month things. We're going to talk about some lifestyle adjustments, how to seek professional help, and encouraging and maintaining a practice of financial well-being. So, alrighty, let's go ahead and continue the next slide. And of course, if there's a moment in here that, there's a moment of reflection or something that you want to share, feel free to throw it in the chat. That's what we're here to do. So, as I had mentioned, I want to start off with a common definition and a common base for all of us to begin this conversation. So, I'm going to introduce to you a Consumer Financial Protection Bureau definition of what financial wellness is. And just looking at the chat, a lot of what you had already said mirrors what this definition says. So, to go deeper into this definition, financial well being is a state of being where a person can fully make choices that allow them to enjoy life. So, if it happens that you have a family or friend that invites you to a camping trip or to a theme park, you have the financial means to do so. You know, Moving forward, it says meeting current and ongoing financial obligations. So are my day-to-day and month-to-month obligations being met? And the last one here says can feel secure in your financial future. So, some of you said, having that rainy day fund, 3 to 6 month reserve, can we feel an emotion? Can we feel secure? So there is an intersection here between emotions and the physical and just money, right? So this definition comes from the Consumer Financial Protection Bureau. In 2017. They did a report all across America called Financial Wellbeing in America. And so the link is there below if you're interested in learning more about it. But I will talk a little bit more about this definition and about that report throughout the presentation. Next slide, please. Alrighty, so maybe this doesn't come to a shock to you, but again, just level setting with you all. 1 in 3 adults does not have any savings at all, and 40% say they do not have enough money saved to pay for $1,000 financial shock. So whether your car breaks down, you need new tires, there's a sudden medical emergency in your family, or maybe your house needs repairs or something happens, um, many folks and many Americans are one paycheck away from a potential financial disaster, shock, impact of great magnitude that affects them and their families' ability to maybe meet their basic needs, whether it's housing, whether it's food. And so that puts us in a tough position. And so again, I remind you, this conversation is how do we build resiliency through money management? I'm again just setting the tone and things that you may already know or personally have experienced. But again, just kind of creating some space to have some better understanding of where our folks may be. So next slide, please, Frankie. Alrighty. And so from a big picture, how do we assess our financial situation? I think there's two aspects to this, and the first aspect is mentally, kind of your mindset. How do I think about money? How do I do this, right? Interesting enough, a lot of Americans do what we call mental accounting. I think the stat is somewhere around 7 to 10. About 7 out of 10 adults do mental accounting, meaning that we don't physically or leverage technology to make budgets. And so what we do is we often we think about it in our minds, and that could quickly end in potential mishaps. We may overestimate our ability. So from a mindset perspective, this is what I like to share with you all. We want to be in a position where you are managing your finances and your finances don't manage you. You are paying your bills on time. You're on track to meet financial goals and able to cope with financial challenges of unforeseen life events. And I think that's a challenge for a lot of folks in our communities today, is that we don't necessarily know what's happening. As some of you already alluded to in the chat here, 3 to 6 month reserve. For some folks, that may be tough to do, right? But it is possible to get there. And that's part of the conversation, is developing that resiliency through money management, which we'll share some tangible things that you can do today to help you. And of course, the Credit Union and Premier America are always here to help. So next slide, please. So we talked a little bit about the mindset, right? So now we're going to dive a little bit deeper into, oh, I see a comment come in. I use the Everyday Dollar app. It's free. Absolutely. Some folks love technology. Some folks don't. That's okay. There's even Excel. There's a lot of great applications out there. But what about for the folks that maybe want to try this with, the old-fashioned pen and paper, which is my personal favorite? I think for a lot of learners, whether you're a kinesthetic learner, an auditory learner, or a visual learner, you can incorporate the manual aspect of it by writing it down, and it's a great learning experience for yourself or for somebody in your family. But again, technology is there to help us make it easier, so definitely leverage into that. So here comes the I guess the tough part for a lot of people when it comes to actually putting into practice some things. We're going to talk a little bit about a cash flow statement. So cash flow statement is really, and if you don't mind, Frankie, just hit next one more time there. It's really just a statement to determine how did my money come in and how did my money come out. Most of us have a get paid on some basis, right? Whether it's weekly, bi-weekly, monthly, depending on your profession and your field. Some of us may have variable income. Maybe we are in between jobs right now. We do gig economy kind of stuff, or maybe you work in a field that it can be variable by nature, like construction as an example. Maybe there isn't as much, or whatever the case may be. So a great way to help yourself understand this is by doing a cash flow statement. The neat thing about this is that you want to do it about once a month. The way you start doing this is you determine how much money that came in. So for example, today is June 10th. You could absolutely do this for the month of May to determine how the month of May went. List all the money that you made for the month of May. So this could be coming from your paycheck, any other sources of income. And then we're going to go ahead and list all of our total expenses. Something that a lot of folks can do by leveraging their bank statements as an example, looking through there and listing all those expenses and even putting them into little buckets if you wanted to. But the idea here is just to list all of them and total them. And so then when you calculate here is a difference between total income minus total expenses gives you a surplus or a deficit. So that's just a fancy way of saying is, did I have money left over? Did I break even, meaning that I didn't make any money or lose that money that month? Or did I spend more money than I actually had? Which happens from time and time again. Sometimes what a lot of folks have trouble with managing is what we call periodic expenses. These are expenses like, maybe your car insurance or your yearly tags, a sudden tax bill as an example, things that you don't necessarily pay every month, but may come periodically every few months, every so often. And so I often say this is your first step into developing resilience through money management, is learning and having the ability to do a cash flow statement. You can do this yourself. We have worksheets ourselves, as Frankie alluded to. A lot of this will be sent in a nice email for you all. There's a lot of technological tools as well, but you can also do this by pen and paper in your hand. So I saw a comment here that I just really quickly want to acknowledge. I think composing a basic budget is straightforward for essentials, rent, food, but how do you prioritize extra expenditures like hobbies, entertainment, travel, etc.? That's a great question. I always tell folks, I never tell them how to spend their money, but it has to agree with their budget, right? So you determine what that budget is. What is your allowance for your for your wants there, for your hobbies? Is it to go hiking or to invest in biking equipment or whatever the case may be? What is the allowance that you give yourself? And the great way to do that is to start with a cash flow statement to determine what you can actually afford to give yourself, and which we'll go into the next slide here to talk a little bit more how we can do that exact question that you're asking there, Miriam. Next slide, please. Awesome. But actually, before we do, I really want to quickly talk about a balance sheet. And if you hit next one more time, Frank, that'd be so great. So the balance sheet is a document that you typically do once a year. And I guess I'll take a quick step back here. I'm going to share three documents with you here, three sheets or three financial statements that you can build. The first one was the cash flow statement. This is the balance sheet, also known as a net worth statement. So the cash flow statement is done once a month. The balance sheet is usually done once a year in the beginning of the year. So for folks that maybe have had work with financial advisors or financial planners in the past, this is typically done on your first or your second encounter with them. And the real idea behind a balance sheet is to know this fancy word that we call solvency, is whether or not we own more than what we owe. So think about everything that you own. It could be the sofa, the refrigerator, your actual cash in your wallet in the little piggy bank tucked away in your house somewhere, the assets that you manage, the money in your bank account, everything that you could sell for a fair market value. So if that could be, your jewelry, as an example, a lot of I often talk to younger people or to young people, and there's a lot of folks there that collect shoes as an example. So if their shoes are worth the value, and and if you were to sell that at a fair market value, what could you get for that? Those are listing all your total assets, and so then you would list your total liability. So this is everything that you owe, whether it's a mortgage, car loan, whether it is a family friend that you owe, your credit card debt, anything that you would owe somebody is considered liability. And the real idea behind a balance sheet or a net worth statement is to determine if year over year, am I moving in a positive direction? Am I trending upward? And this helps financial planners and counselors like myself better understand, are you adopting the behaviors? Is it paying off? Where might there be, some challenges in your finances to help us better address those concerns or those challenges that you may be experiencing? And so, again, the neat thing about this is that it's really only done once a year. It's not something that you have to keep a close eye on, because net worths can be can vary, but what we see is over a period of a lifetime, they generally trend upwards. And I think I have another slide here to show you a little bit more about the averages happening across the United States when it comes to net worth. Next slide, please. Okie dokie. So this came from a 2020 U.S. Census Bureau, the net worth life cycle. I like to share this graph for two reasons. Because one, it talks a little bit about the equity that we get when we're a homeowner. And it also shares with us that our net worth doesn't peak, usually peaks in the later part of our lives. So in today's society, I think we often see, whether it's on media, through friends or family, this idea of making money and setting yourself up for success. But again, we started this conversation by saying that that success can be subjective, but we had similar themes, on having an emergency plan, be able to not worry so much about every penny when you're shopping. But I want to share this with you because, as you see here on this graph, the average American doesn't hit their peak net worth to about 65 to 69 years of life at 194,000. The distinction there between the blue graph and the red graph is really determining, are they homeowners? And as you can see, the blue graph has a significantly higher net worth compared to the Americans that do not have equity in a home or are not homeowners per se. I know I'm preaching to the choir from Southern California. Home ownership, or from wherever you're tuning in, home ownership is getting more and more, uh, I guess, more difficult to achieve. housing prices are going up, cost of living is going up, wages are not matching, the cost of living in most sectors of the labor market. But I think the story here is if you have the opportunity and building that resilience, you can achieve this. There's a lot of federal government programs, HUD certified programs that help individuals, first-time home buyers, with down payment assistance and a wide variety of resources, which we're here to share with you and support and give you as well. But I wanted to share with this because, it's you can take a deep breath. Sometimes we want to get somewhere sooner than we are, and I think that's perfectly natural, especially when it comes to resources like money. But when we often worry about it too much, we can actually hinder ourselves and actually kind of get in our own way to financial success, or in our case, financial wellness. So uh, take that however you'd like, but that gives you a sense of what the average American is experiencing when it comes to net worth. And so, as you see, that range is towards the later part of your life. All right, so we'll go ahead and move on to the next slide. So to recap, we talked about the net worth. I'm sorry, we talked about the cash flow statement. We talked about the net worth statement, and so now we're going to look into the future with a budget. So this goes back to the question about a little earlier ago, is how do you prioritize those extra expenditures like hobbies, entertainment, and travel, which is a great question. And so the neat thing is if you do a cash flow statement, and so this is my challenge to you, is to build a cash flow statement for the month uh, of uh, of May. I'm sorry, we're in June, right? Yeah. So if you do it for the month of May, the budget will come so much easier because you'll know if you are operating with a surplus, meaning you have money left over, and then you can decide if we want to prioritize extra expenditures like hobbies, entertainment, and travel. Because I am a firm believer of treating yourself. And I'm also a firm believer of paying yourself first. So if that's putting money into your savings or putting money into your hobby fund, absolutely, because we have to be able to balance these things, right? So if you hit next one more time, Frankie, I think I have the budget slide here. I love to call them spending plans. And so again, the idea here is if you build the cash flow statement, a lot of the work has already been done. So you looked at what went, and now you get to decide what you want. But I totally forgot about this slide. I really quickly want to share what this acronym that I've learned and I use day to day that helps us a lot. I did see a question here, Mark. Just know that I did see your question about retirement accounts. I'll get that towards the end. It's a great question. I'm sure a lot of folks would like to know as well. But just know I did see that, and we'll get back to that. So, really quick, SMART goals is a great way to hold yourself accountable. And it's a great technique, a great strategy, regardless of whatever goal that you have. So, if this is a personal goal, a fitness goal, a financial goal, whatever it is that you have, this is a great way to hold yourself accountable and be intentional. So the idea really quickly here is to be specific. What do you want to do? Is it to save $1,000? How am I going to measure this? Well, I'm going to give myself 10 months. All right. Is that actually achievable? So is it in your power to accomplishment? So let me think about that, right? How can I do this? What is the tactic? What is the strategy? Is it realistic? Am I shooting for the moon, trying to land in the stars type of deal, right? And is it timely? So when exactly do you want to accomplish it? So the example that I have here is that I want to save $1,000 in 10 months by doing an automatic payroll deduction into my savings account. So imagine, so one technique that I often I have people do is, let's say that they have their primary financial institution at the credit union or at another financial institution. You could open a separate account and speak to your HR department, your payroll department, and say, hey, I want you to allocate this percentage or this dollar amount and put it into this account for me. What does that do? It means that you'll start that process, easy to forget about it, and so that way that money will automatically be transferred straight from your payroll, and it won't hit your physical check or your bank account. And so you can leverage this technology, you can leverage these things to help you get to where you need to be. And so the SMART goal right here is a great technique, a great strategy when you're thinking about developing a financial plan. Fair enough. Alrighty, I think on the next slide I talk about the budget and the spending plan, and I started with this because it's important to know, what your goals are and how to build one. And so to the question earlier about, how do you prioritize? Well, let's say in your case you do want to prioritize, those extra like hobbies. So you already done the cash flow statement. You see what you can afford to put into this category. So if that's your SMART goal, then absolutely run with it. All right, I know that I have I don't know, let's say your hobby is biking. And I know biking can be kind of expensive, getting the gear, getting the right clothes, et cetera, et cetera. So let's say I want to start this new hobby, or I want to invest a little bit more because I need new tires, or I want the latest model of this or that. So then we would find the price of that model or price of that particular item that we want to, and then we look at our cash flow statement. All right, so I know that I can build this, or I can build this savings habit, so that way I can buy this. And how do you hold yourself accountable and how do you actually do it? Is by a spending plan. So the main purpose of a budget is to enable us to take control of our finances and accomplish our goals. Without it, it is really difficult to keep in mind the bigger financial picture when making spending decisions in the moment. And this is why I said that most Americans do what we call mental accounting. We do it up here in our minds. And so it's hard for us to be accountable. So very similar to the cash flow statement, you have an idea of what income you're going to be making that month, right? If you do happen to have a variable or periodic income, use your best guess there. But then you would listen to determine how you will spend your income. So we know we have our mortgage or our rents, we have our food, our utilities, all of the wants, right? All of the things that we absolutely need. But where we have more discretion is in our wants area. So I'll talk a little bit more about where you can make some changes there, but to call out some, maybe our eating out budget as an example, tends to be there tends to be a lot of variability there, a lot of flux that you can make some decisions. Maybe you had some significant social events, like maybe birthdays that were all in 1 month, and you wanted to give gifts here and there, things like that. So you get to determine, how is it that I get to spend this? If you could only afford $50 to put into a savings account so you can buy or spend on your hobbies or entertainment or travel, then that's the tough part. That's the resilience part. That's the discipline part that we have to hold ourselves accountable to. And of course, you don't have to do it alone. You can come into the credit union. We can support you in many different ways with financial coaching, as an example. Be happy to help you. And really quick, I have a quote down here. So maybe you've heard it. It's quite cliche, but I remember back when I was in high school, my chemistry teacher, I had failed the test, and he had asked me if I studied, and I said no. And he hit me with this line. He says, "If you fail to plan, you plan to fail." Maybe you've heard it, maybe you haven't, but I think it's so true when it comes to money. We have to be intentional, and it can be quite overwhelming sometimes to think about, I just finished my work day. I've had these extra responsibilities. If you have a family, maybe it's feeding the family, or maybe it's doing extra things around the house. And the last thing you want to do is think about money, right? It can be quite taxing. It can be quite troublesome. So here's a tip or a challenge that I invite you all. Pick a day of any month. We're in the month of June. And if this isn't something that you already do, then I definitely encourage you to challenge yourself. Come into the credit union one of these days, allocate an hour and say, "Hey, I just came in. I don't necessarily need to do any financial transactions, but I just want to use this space for about an hour and a half to help to build a budget, to give myself that space." We offer coffee, and sometimes we have little snacks, and of course, we're there to help. So, you don't have to do it alone. Feel free to come in. We're here to help. We'd love to be part of the conversation and give you tools and resources whenever you need it. So again, to recap, three financial statements. We talked about the the cash flow statement, the balance sheet, also known as a net worth statement, and the budget here. Absolutely, at any location. Question just came in here. Any location, it doesn't have to be your home branch. At any location you can come in, we'll be happy to assist you and walk you through with whatever you are, or wherever you need that extra assistance. So again, Mark, I did not forget your question about retirement accounts. We'll talk a little bit about that towards the end. I'm just going to get through a few more slides here. So many of us already know the differences between needs and wants. And if you don't mind hitting next one more time, Frankie. But there are some key things that I want to talk to you a little bit about, how we can make some lifestyle adjustments when it comes to our life, and so I called it out a little bit earlier ago, our eating out budget. And again, I don't tell anybody how to spend their money, but I do tell folks it has to agree with your budget. And this is one area where I consistently see there can be some flex. So I know we all love our pizza, our coffee, our tacos, our noodles, you name it, whatever your guilty pleasure is. Absolutely. I'm not saying that you shouldn't indulge in these things. Absolutely, you should, but it should agree with your budget, and hold yourself accountable to that. And so if you hit next one more time, I think I have an interesting statistic here. I think it came from a 2021 Bureau of Labor Statistics Yeah, foodie's rule. Absolutely. I love my own food myself. But maybe you knew this, maybe you didn't know. I wish I had a more up-to-date figure because I think this number's gotten higher. But from 2021, BLS data, the Bureau of Labor Statistics said that the average American dines out about almost 6 times per week, which the average household spends about $3,500 on eating out every year, or just shy of $300 per month. This is can be slightly controversial, right? Some folks say, well, Alfredo, like, I have a family, I need to eat. And sometimes it's just easier for me to pick up a pizza on the way home. Absolutely, 100%. Let's say you find yourself in that situation where maybe it's Tuesdays and Thursdays, your child has soccer practice, basketball practice, whatever the case may be. Maybe those are the days that you allocate a certain amount of flex to your budget to allow for this type of dining out budget, as an example. Um, maybe it's packing food on the other days or things of that nature. And so some of these habits and some of the resiliency through money management requires you to change your behavior, to change habits, so you can achieve and hit those goals that you have. Because remember, we all have financial goals. We can use a SMART acronym to hold us accountable. And this is just one area. Your budget may look completely different. You may have more flex in another area. Maybe it's not the dining out budget. Maybe it's another bucket in your budget. But again, this is just something that I see um, that I've seen time and time again. Frankie said those $5 lattes add up for me. Absolutely. Maybe it's maybe a new hobby you can do, you can learn is how to make coffee at home, right? There's and I'm not just talking about the Keurig, right? But actually learning how to make coffee, and maybe that could be a new hobby or a new experience that you can have at your household and your family, your friends, etc. So the neat thing about this is that you can pick up new skill sets, and you can leverage them however you like. So again, another lifestyle adjustment that I want to talk about is lifestyle creep. So this life adjustment really speaks to the emerging professional or individuals that maybe have made money over a period of time through career growth. And so the example here is that let's say in year one you're making 50,000, year three 65, and year five 80,000. So you have a history of career growth of income. So the question I ask you is, if I make more, so I should spend more, right? I think that the logical answer for most would say no. I will not spend more, but a lot of research suggests the otherwise, is that we tend to actually spend more when we make more. So this is just more of a call out for you all on the call, is that if you find yourself as a professional or an individual that's, getting raises, maybe every other year or every so often, what am I doing with that extra income that I had? If you hit next one more time, Frankie, it shows some of the areas where people tend to have this extra income, where it goes. And again, I'm not here to tell you how to spend your money, but I'm trying to give you some tips, some information. And again, it has to agree with your budget. So some folks, because they make more, they spend more, right? Uh, Again, logical answer is no, but some folks end up spending several dollars per day on coffee. Maybe when we're traveling, we buy business rather than economy. Maybe we're eating out more frequently and at more expensive restaurants. Maybe we indulge in, nicer clothing or fancier or expensive clothing, I should say. Maybe we start paying for amenities like housekeeping, buying or renting more of a house than you need, or a second home, maybe a third car, a boat, et cetera, whatever the case may be. So the idea here is that if you find yourself making money over a period of time, and you're getting raises, what am I doing with those extra funds? So again, today's conversation is resilience through money management, and this is an area of focus where you can apply it a little bit more intentionality, so that way you can pick and choose how your money goes and where it goes, and you can put a little bit more of that money into that travel funds, into that hobby fund, into that retirement account, whatever the case may be for your personal financial situation. Next slide, please. There was a comment here about the food. When you love variety, it's hard to cook at home. I 100% agree. I'm a foodie myself. I mean, Thai food, Japanese food, Mexican food, Italian. Yes, I understand. It's easier to buy than to make. I hear you there. One quick other lifestyle adjustments and money behaviors that I like to suggest to you all. I'll start with being frugal, being thrifty. We don't always have to buy the latest and greatest if it works, and if it works for our budget. It's just a way of being intentional. about how we do our money. So again, the context of this conversation is building resilience through money management. And I think that's very much linked to intentionality. So how is it and where is it that we spend our money and why do we spend our money in that way? Using credit cards prudently, if at all. Be very mindful of credit card debt and those cycles. It can be very tough and very damaging physically and emotionally. Spending a little bit more time doing a little bit of research, maybe waiting a day or two before you make that purchase if you're buying whatever it is that you're maybe buying, technology, a vacuum cleaner, you name it. Maybe not always going with the first option just because it can be overpriced, avoiding and managing debt, of course. And of course, relying on your support system if your friends and family talk about finances. And of course, the credit union is here to help. Next slide, please. Oh, Mark, I just saw your question again, and you had asked, is it the net worth including retirement accounts like IRAs, 401? Yes, absolutely. I thought you were asking me something completely different, so that's why I wanted to hold off, but I read your question incorrectly, so yes, apologies about that. It is including your retirement accounts like 401ks, 457, all investment accounts essentially. So, seeking professional help, what is financial counseling? As Frankie said, I'm a financial counselor, so it's really a collaborative effort between a counselor and a member to begin understanding complex relationship between values, attitudes, emotions. You see it here on the screen. Um, a financial counselor is a little bit different than you would be a financial advisor or a wealth advisor, as an example. They tend to work with your assets. They tend to invest on your behalf. Whereas a financial counselor helps resolve financial problems, meet financial goals, and improve your quality of life. So there is a distinction there because sometimes maybe somebody here on the call has had this experience. You go to a financial advisor, a wealth advisor, and for whatever reason, you felt like they couldn't meet your needs, as an example. And so this type of work is really dedicated to helping folks, understand their money challenges or achieve their financial goals through that kind of one-on-one, conversation and habit setting. Next slide, please. I think we're nearing here the end of our presentation. So I want to call out one service that we offer that the credit union offers. So we partner with GreenPath Financial Wellness. They are a not-for-profit that's been in business for over 60 years. So GreenPath Financial Wellness and Premier America united to offer these services to our members in our community. So if you ever wanted somebody to chat with about maybe a credit report review, trying to understand that and what is on your credit report, maybe you find yourself in a place where you've incurred a lot of debt and you don't know how to manage it or how to get out of it. They offer debt management plans to help you do that. Maybe you're looking to buy a home for the first time. They offer pre-purchase counseling, and their counselors are HUD certified. So the Housing and Urban Development Department of the federal government offers sometimes incentives to people who have gone through HUD counselors, and you typically have to pay for that almost at any nonprofit. We pay in advance for our members to take advantage of these services. So these services are completely free. Maybe you're a parent, navigating higher education and how to finance that. They offer student loan counseling. So again, the context of today's conversation is resilience through money management, and one of the ways to do that is knowing where you can go, and especially you can trust to get services, to get help, to have conversation about what you can do with these kind of things. So, GreenPath, to recap, is completely free to our members. It is completely private as well. It's done over the phone. It is available in English and Spanish, and if you happen to speak a language outside of that, they work with interpreters with to up to 300 languages, and these services are there completely free for you without any additional cost. I don't know if it's my screen here, Frankie, but I'm seeing a black screen here. Um, I was going to say next slide. Uh-oh. It looks like we may have lost Frankie here. I apologize. Yes, Nancy, one second. My co-presenter is having some technical issues here. Give me one second while I pull up the deck and drive. Bear with me. Okay, view. All right, let me share my screen. All righty. So yes, how can you contact them? I have here on my screen right here a QR code. And of course, we'll be sending you these the slides and a recording, of course. But if you have your phone out, or if you have a way to scan this QR code, it will take you to their website. I also have their phone number listed here, which is 877-337-3399. There is only one thing that you do have to do to receive these services at no cost. You have to let them know that Premier America sent you. So usually when you call, they'll say, "Hey, how can we help?" And then you have a quick little exchange, and then they'll ask you, "Okay, great, happy to continue. Did any credit union or who sent you to us?" And then at that point, you say Premier America Credit Union. And that's how you would continue to have these services at no cost for you. So again, it's a great service. To recap, it is completely free. It is available to all of our members in English and Spanish. And if you happen to have a language outside of that, up to 300 languages there. Debt counseling, debt management, credit counseling, budgeting, rental counseling, foreclosure prevention and support, pre-purchase counseling, student loan counseling. So again, I'll wait another about 30 seconds. I'll leave this on the screen where you see this now, so you can note that number or scan that QR code. But again, we will be sending you a recording and the links to these services there. Okay, so let's see. All right, so we're towards the end. Building resilience through money management is a topic that I love talking about because a lot of us, I feel like, could be in a better financial position. And it starts by doing some actionable steps, right? So I just have some things in here. Talk to someone. If you feel like you are overburdened or stressed about money matters, please, please, please find somebody that you trust, find somebody that you care about. We'd be happy to be that person for you if you want us to be. Take inventory of your finances. We can definitely help you with that as well. Make that plan and stick to it, which is one of the hardest things to do. But we know you can do it. Create a budget on a monthly basis. Commit to change and ask for help. And I know it's a little cheesy, but you all have big dreams. The path starts here. We're here to help. So that's the end of my presentation. I will open it to some questions here. I'm going to stop sharing my screen and see what questions we have. I'm just going to text my co-host here that no worries, I'm driving the presentation. Okay, some technical difficulties there. Alrighty, so feel free to throw in your questions. I'm going to review the chat here and I'm going to go through, see if any of them that I missed. Okay. Somebody had asked, do you assist with estate planning and inheritance? Absolutely. We do have our wealth management team that can help you with that. So you can simply visit us on our website, give us a call, or visit your local branch. We'd be happy to connect you to those
Local
folks.
branch.
I think Frankie, you made it back. Fantastic. We finished the presentation and now we're just doing some Q&A. One question came in about estate planning and inheritance, and I said that we can absolutely assist with that at any of our locations. Happy to help. We have a little bit more time. Does anybody have any other questions, any other comments, anything they want me to expand on? Maybe a financial question you've always had and just maybe haven't had the space or the time to ask it. I'm here to do that for you. It could be on what we talked about today. It could be about something else. So somebody asked, how do I prepare to buy a house? That's a great question, a big question. There's a few phases when it comes to buying a house. Some of the first step is to being financially solvent, which just is a fancy way of saying is getting rid of all your liabilities, everything that you owe. So when we talk about that net worth the net worth statement, we measure and we see our assets, but also our liabilities. So where a lot of people have trouble, or a big part of that home buying process is getting their credit score to where they want to be, or their debt to income ratio, which is essentially all your liabilities divided by your income, and you get to see how much of your income is tied up to debt, as an example. So that's the quick and short version, Nancy. I would definitely recommend coming into our branch because there's a lot more in between there that I did not mention. I could talk about that for an hour in itself on how to prepare to buy a house. Thank you, Frankie, for saying that we'll be hosting a webinar in the next couple months. But of course, you can always come into our branch if you want to have that conversation sooner. But I hope that gave you some sense, just a little bit, just a teaser, really, because again, I could talk about that topic for an hour. Okay, let's see here. Best way to build little interest while saving dollars without having to invest in stocks. I understand that's a bigger jump to make more, but not looking to lose those few dollars saved. That's a great question, especially in today's market. It's tough to determine how things will do. Um, there's of course our we have different types of investment accounts that are not tied to the stock market, such as money market accounts, certificates of deposits. We have attractive rates. We have good deals going all the time. That'd be a great way. Note that for the certificate of deposit, you are locking in that money for that period of time that you select. For a money market, there's a little bit more flexibility, but you earn a higher dividend rate than you would in a traditional savings or checking accounts. There's even also, like, if you wanted to do like bonds as an example, our wealth advisors can help you manage maybe an individual retirement account tied to bonds. So it's not necessarily the stock market. So for that type of question, it would be best for you to come in and receive some type of orientation, some type of just so we can better understand where you are and what needs you have and how we can best move forward. So I would recommend that you would come into one of our locations so we can better understand where you want to go and how can we get you to get there. So another question came in, what is the difference between money markets and high yield accounts? Absolutely. So money markets, the way I describe money markets is like a hybrid between a checking account and a savings account. So the idea behind a money market is that you have check writing abilities, meaning that you can withdraw money without any penalties like you would in a certificate of deposit, an example. We give you higher rates, but it usually has a higher limit amount. Like, so you usually have to open a money market with, as an example, $500, 1,000, 2,000. All the institutions have different requirements, but the high yield accounts are really usually the certificate of deposit are locked in for a period of time. So you will have penalties there if you need to take out that money before that time frame that you agreed to, whether it's a year, 24 months as an example. But those rates tend to be a little bit higher because the institution knows that you're going to leave the money there for that period of time, so they can afford to give you a little bit more. Whereas a money market, you may take it out the next day or the week following, and so the interest rate is not as high as the high yield account. Please let me know if I answered your question, or if you have a follow-up, happy to tackle it. Let's see here. I have something else. One institution I spoke with wouldn't deal with me because I didn't have 500K in retirement funds. Do any of the premier counselors have such restrictions? That's a great question, Sean. My understanding is that we don't. Frankie, feel free to jump in here, or if we can find that out for Sean here. We see every member. We talk to every person. I don't think we have any limits, but there are certain instances where certain products or services sometimes do require some amounts, whether you're for an example, I'll take a step back and I'll say individual retirement accounts can start up to as little as $500 as an example, and we can help you manage your individual retirement accounts. Depending on what you exactly want to do, then at that point we'd have to look at it a little bit differently. But we would refer you at that point to our wealth management team, our wealth advisors. So we'd be happy to send that information to you, or maybe Frankie, if it's not included in the email, if you can throw it in the chat there, or if there's a way we can follow up with Mr. Walsh here on that specific question. So again, beginning of the conversation, I said sometimes we don't have all the answers, but we guarantee that we will work towards getting to that truth. So there you go. Thank you so much, Frankie. There's no minimum for consultation with a wealth advisor, but our wealth management can share if there are minimums for specific products. I will share their information with you. Fantastic. Thank you so much, Frankie, for that assist there. All right. Let's see. I think I see some folks type in there in the chat, maybe some more questions. Well, we wait more. I guess I'll just really quickly talk about that an individual retirement account. It takes very little to start and very easy to manage. If you don't have a retirement plan, or if you do, it's a great way to supplement. So if you do have some extra funds, if you are operating in a surplus, you'd be surprised, what $50 every month can do over a period of 10, 15. Obviously, the earlier you start, the better, but that can lead up to a amount larger than what you had originally would have had if you had put it into a CD, for an example, or a high yield savings account. So I have a comment here. When I met with a wealth advisor, it didn't go as planned. Basically, I didn't make enough to help support the investing they were suggesting. Megan, I'd be interested to hearing if that was with us or if that was an experience somewhere else, because then I can take that back to our team as feedback in determining what ways can we best support our members. Okay, that was with us. Maybe, Frankie, if there's a note there that we can uh, follow up with Megan there and learn a little bit more about how that happened, or if there's anything more that we can do for her. Um, Another question came in, do you offer 403B retirement plans? No, we don't offer 403B. We do offer individual retirement accounts and different retirement options. We can manage 40. That's a good question, actually. I would have to refer back to wealth management. Really quick, on the 403Bs, the 457s, or the 401Ks, those are what we call employer-sponsored retirement plans. So typically, individual brokers or different wealth managers and advisors won't offer these types of accounts because they're employer-sponsored. They fall under a statute if we call ERISA, ERISA. I'm forgetting the acronym. But that's why you won't find most providers. But what they'll offer you is a traditional IRA account or a Roth IRA account where those funds can be rolled over to, and having those wealth managers manage for you. Hmm. Can you recommend any books? Excellent webinar and great info. Thank you. Absolutely, Miriam. One of my favorite books is Mind Over Money by Brad Klontz and Ted Klontz. Um, it's not so much about, this is what you need to do with money. It's more of the mind behind it and how we as people make money decisions, or how of our personal experiences have led us to make financial decisions. So as one quick example, to plug that book there, they talk about what we call money avoidance. So in some instances, there may be individuals who may have certain negative associations with money, and they tend to shy away from it. That can be like maybe a thought process saying that money is the root of all evil, as an example. And so sometimes these beliefs can hinder us from making financial decisions. So yes, that was just a quick little. There's a lot more into that book, but yes, I would recommend that one. Um, there's also a book here. I think I don't have it. I thought I had it right here next to me. Actually, I don't. It's called Getting Out of Debt. It's by the National Law Consumer. So if you're interested in more of like a strategic like action like focus, that'd be a great resource as well. We will include those books in our email as well. Thank you, Frankie. That's awesome. I appreciate that. Yeah. Okay. Awesome. I appreciate you guys hanging out with me this evening, and Frankie and I, and asking all these questions. We love the engagement. This is what we love. Maybe if there's an opportunity, if there's anything we're building a current library or a current schedule of workshops. Frankie and I would love to know if there's anything, for the folks that are on the call, what would you like to see down the road? Great, very interested. And so if there's, I guess I'll leave that quick little ask from you all as we close out this evening. But of course, you can always email us, tag us on social, get a hold of us that way, visit our branches. We're here to help in that regard. So if there's nothing else, I'll pass it back to you, Frankie, if that's okay.
Absolutely, and glad I am back in here on the webinar. I apologize for the technical difficulty earlier. But on behalf of all of us at Premier America, thank you so much for joining us for Resilience Through Money Management. We know your time is so valuable, especially on a weeknight, and we hope tonight you are leaving feeling just a little more empowered and a lot less alone on your financial journey. If we didn't get to your question during the session, or if one pops up tonight afterwards, don't worry, we are here to help. Like I said, we will be sending a follow-up email soon with a link to the recording, all the resources we mentioned, and a way to connect with us if you want to ask an additional question. And of course, if you found tonight helpful, feel free to forward that email to a friend, family member, or coworker. Sharing is caring when it comes to financial wellness. And a big thank you again to Alfredo for guiding us through tonight's conversation. And thank you to you for showing up, being curious, and investing in yourself. Have a great night, everyone.